School of Business, and today we will be focusing on the insurance sector. Earlier on, the last 2 weeks we had covered the private higher education sector as well as the healthcare sector. So today we will look into the insurance sector instead. Okay, a little bit of who we are, about UOW Malaysia KDU. In fact, KDU has almost 36 years of history by now, and we have a total of 4 campuses. 4 campuses, 2 in the Klang Valley and 2 more in up north in Penang Island. It's island as well as the Batu Kawan, in the mainland side. In the Klang Valley side, as the photo, as you can see, this is our main campus, University College campus, and this is one of the flagship campus as well. Okay. And since last 2 years, end of last 2018, we are now part of University of Wollongong, Australia. So we are part of the global network, of University of Wollongong, Malaysia. Okay, together with their campuses in Australia, Dubai, and Hong Kong as well. Okay. A little bit of our panelists for today. As mentioned just now, we will have 2 sector panelists. The first one is the CEO of Life Insurance Association of Malaysia, or short form LIAM, Mr. Mark Odell. Mark, would you like to say hello to everyone?
Good morning, everyone.
Okay, next we have the second sector panelist, which is Mr. Antony Lee Fook Weng. He is the chairman of Persatuan Insurans Malaysia, or short form PIAM, and he is also currently the CEO of AIG as well in Malaysia. Okay, unfortunately, he still has some technical issue. Anyway, we will try to fix it shortly. Okay. And the next one we have is our advisory panelists. This session we work together with KPMG in Malaysia, and therefore the advisory insight is basically from supported by KPMG in Malaysia. So for today's session, we have Mr. Mok Wan Kong, the head of insurance of KPMG in Malaysia. Mr. Mok, would you like to say hello to everyone?
Yeah, thanks for the whole. Thanks, Ryan. Thanks for inviting me. Good morning to everyone participating today. So happy to share our views and lead this session. Thank you.
Okay, thank you so much. Okay. So I will need to mute both speakers first, the panelists first. Later, when it's their turn to speak and give their views, they will on their unmute themselves, basically. Just give me a short while. Let me just double check with Mr. Antony's connection again. Just give me a short while. Mr. Antony says that he has some issue. Now he's trying to get into another location to log in again, but it might take him a bit of 15 to 20 minutes time. So I apologize for this. Otherwise, we will just move on with our session first for the moment. Okay. So let me just bring all of you on a little bit brief of today's session, and basically what is the context that we have for today. Okay. Well, I actually did this last week, in the last week of healthcare session. It was 7.1 million cases around the world, and today it's already increased by 1 million cases, yeah, just in a week time. It's a bit scary to see the numbers there. And up to today, it's already about 440,600 deaths worldwide, with US, Brazil, UK, Italy, and France being the top 5 numbers in terms of death cases. Yeah. And also we know that the Malaysian government has stepped up and introduced several economic stimulus packages over the last 4 months. In fact, the first stimulus package was announced by the then interim Prime Minister, Tun Dr. Mahathir Mohamad, on the 27th of February 2020, that worth about 20 billion ringgit Malaysia. And the current Prime Minister, Tan Sri Muhyiddin Yassin, announced the first Malaysia Prihatin economic stimulus package on the 27th of March 2020, that worth about 250 billion ringgit Malaysia. And 10 days later, he announced the additional Prihatin economic stimulus package for SMEs specifically, yeah, that worth about 10 billion ringgit Malaysia, yeah. So last week, yeah, on the 5th of June, he announced the new Penjana stimulus package, again, that worth about 35 billion ringgit Malaysia. Well, even though we know that several packages has been introduced by the government, the market sentiment is still not as encouraging, yeah, and probably that's one of the reasons why Penjana stimulus package is introduced. So we also understand the consumers' behavior has changed tremendously, yeah, and this also pose a challenge for the industry sector to adapt, perhaps. So this is what we would like to listen to the sector panelists that we have today, as well as our advisory panel from KPMG in Malaysia, to shed us some lights of what is going on in the insurance sector during this MCO period and through this COVID-19 pandemic. So it's really about the new normal situation now for everybody to adapt to. It's not just our daily life, but as well as businesses too, yeah. Based on the latest KPMG in Malaysia's report on post-MCO reset, it was noted that the insurance sector is categorized under the transform to re-emerge quadrant, as this analysis has been done by KPMG in Malaysia. So later, we will be glad to have Mr. Mok to explain a bit further to us what exactly does it mean by transform to re-emerge for the insurance sector to look into, yeah. So therefore, the context of this virtual discourse session is really to focus on the condition in which insurance sector is facing currently, and perhaps to predict a bit of the future coming up the next 3 to 6 months time. And hopefully our panelists here will be able to shed some light to all the attendees on the survival tips through some business reformulation and business remodeling, if that's required, yeah, for the industry to move on and move forward in this challenging time. Okay, so let me introduce the first advisory panelist that we have today to look into what exactly from the advisory side, yeah, how do they view this insurance sector at this present moment. So for that, I would like to invite Mr. Mok. Mr. Mok, over to you.
Thank you, Brian. Good morning, everyone. Again, I guess let me first by saying that I think without doubt, this global pandemic is something that is new and something that is everyone is facing, and all companies, not just insurance companies, who have similar short and long-term macroeconomic impacts arising from this crisis. In the recent polling that we have done by KPMG, 86% of the companies are going to be in the phases of resilience and recovery phases of the economy. Obviously, the depth and duration of this resilience and path to recovery will vary by company and sector, which Brian has alluded to earlier on in our post-MCO reset package. So in the resilient package, resilient phase, companies are going to take stock of the crisis, health and economic, and doing anything and everything possible to stay in business. And once you move to recovery, which Malaysia is currently in the recovery phase of the MCO, businesses are going to start seeing the light at the end of the tunnel. Things are going to be getting back, hopefully, to normal, the new normal, so to speak, and are trying to find the best ways to operate under the new normal conditions. Just give an example earlier on, for KPMG as a accounting service and service firm, we are also needing to transform our ways of working, educate our staff, and form certain new SOPs to allow our business to carry on and to continue to deliver our services. So same goes for businesses across the economic sector and also insurance sector. Our analysis that we've done on the post-MCO situation, we view insurance sector generally falls within a transform to re-emerge quadrant. What this means is that companies will recover. I mean, companies in this quadrant will recover, but along a protracted path requiring reserves of capital to endure and transform operating models. So I think in today's session, we'll talk more about what insurance companies now got to think about and what kind of investments they probably got to consider or accelerate going forward in this new normal environment. As you know, insurance is a highly complex business involving multiple processes to administer the policy that are issued to policyholders, price new business, sell new business, and on top of that, you also have to manage your own staff, working environment, and working arrangements. And not to mention, you're also connected with a network of intermediaries, so-called your agents and brokers. So how are you going to operate under this new environment will extend not within your organizations, but also how you interact and how you integrate your operations with the agency and broker networks that you're operating with. Certainly, the COVID-19 situation provides a wide-ranging challenges for insurers. And how insurers are faring in different parts of the world something that is really interesting to talk about. If you look at what's happening around the world, as what Brian has shared, different geographical locations globally has got different stage or time frame in where they are in this global pandemic condition. In Asia, we are probably a bit more ahead of the curve because it's where this virus struck first. And businesses here are on the verge of moving into a period of assessment to gauge where to head in the market and what long-term impact may be. But the same cannot be said for businesses or companies in Europe and North America, who are still very much in the eye of the storm. Not to mention that there are also other distractions along the way, as we know in the news. There are other protests and issues that's going on in those markets. So corporations are obviously having to reconfigure to cope and trying to establish what business as usual will look like in these terms. I think overall, I think it's still at early days, so where we are, and there's major repercussions and implications many years to come. These are some of the common themes. We are seeing already insurance companies having to mobilize their resources to work from home. That's already a major impact this virus had, and it's happened in a very sudden way, and everything got to be remobilized almost immediately. And how products are going to be impacted, how working arrangements and customer interactions are going to be impacted. That's something that perhaps we'll talk more about in today's session. Right, Brian, back to you.
Okay, thank you very much, Mr. Mok. Before we move on to the sector panelist views, right, I just want to clarify with Mr. Mok, in this post-MCO reset report, as you have indicated just now, insurance sector is under this transform and re-emerge, right? So does this apply to insurance company or is it solely on insurance company, or also does it apply to insurance agencies and agents as well?
I think to answer the question, I think in my view, they're all interconnected. I think when you look at insurance companies and insurance agency network having to work together, the transformation by insurance companies would inevitably impact how insurance agents need to work in the future, because it basically form the connector between the companies and the policyholders or customers. So the way businesses are going to be sold, new business is going to be written, and how agents communicate with their customers and what they need to and how they communicate, especially with the new generation of customers, I think inevitably that will have some impact on the agency network.
Right. Okay, thanks a lot for the clarification. Yeah. So next we will move on to the sector panelist views. Yeah, for the insurance sector. The first one that we have here is Mr. Mark Odell from Liam. Mark.
Okay, thank you. Good morning again. I thought it might be pertinent to the discussion to talk about lessons learned first from the MCO in particular. These observations come from a survey that we've done with the life insurance companies, with the CEOs on what they've learned. And it's really kind of broken down into three areas. One is workplace, the other is customers, and the third is financial, right? So feedback on the workplace is companies need to be better prepared for work from home, right? As Mark said, we're kind of thrust very quickly into a situation where we're all transforming to immediately, right, to work from home. So issues about laptops, secure sign-ons, home environment, Wi-Fi, etc., all need to be enhanced and reviewed. There's also a need to accelerate digital adoption, right? So different companies were at different places in their digital journey, and those that were less digitally able really had some challenges. And the digital adoption applies both to staff in terms of equipment, communication. I mean, we learn about Zoom. I didn't know there were so many modes to do virtual meetings, right, as we have today. In particular, in terms of intermediaries and agents, right? The industry had took about, I would say, about 4 or 5 weeks to transition from on-site paper and pen agent licensing exams to virtual exams. So now we have a capability of doing a large percentage of agent licensing exams virtually. Both onboarding and training has switched modes to much more virtual and remote, and as well as the sales process. Many agents are very resourceful and have learned to adapt quickly to interacting with their prospects and consumers remotely through digital means. Communication in the workplace, support and empathy for staff and agents was cited as important, and better communications with and between authorities. In the beginning of the MCO, we had a situation where life insurance business was deemed to be essential, and the central bank had asked insurers to keep their branches open, but yet you had a breakdown in communication with local authorities actually closing branches, telling them to close. We're uncertain about the status of life insurance companies, and so there needs to be. I know everything was done sort of on the fly, if you will, but there can be better coordination between authorities and the industry. In terms of customers, lessons learned is that communication needs to be fast and regular. Again, adoption of digital advice, sales, and service. I had commented in another forum about banks, right? So for the first few weeks of the MCO, you still had to physically go into a bank branch to conduct certain types of business, like transfer some money, execute a sale or purchase of an investment. And even after that, you still had to paperwork and send digital PDF images to the bank, right? So insurance is not the only sector that needs to transform. So, driving digital adoption for sales and service. Also, for customers driving increased adoption of self-service modes. Customers can adopt quickly when need to, but companies need to be prepared with those options. Also for customers, empathy to customers, financial relief. The insurance industry came together with a COVID testing fund of 8 million ringgit to help our policyholders out. Also, the industry came up with a premium deferment scheme that allowed customers to defer premium for up to 3 months for those that were directly affected or were economically affected. And I think this has proven to be something that's appreciated by customers. And also, I think there could be some product innovation that comes out of the recent experience. Many people have questioned why, generally medical insurance excludes pandemics, and why, and the outcome of that during the pandemic really was insurers waiving that exclusion. I think you might see some innovation going forward with some products in the future. Last bucket is really financial. And insurers need to analyze lessons learned from the sudden and dramatic impact from the capital markets and interest rates. Their stress testing, their hypothetical stress testing was put to the test. And no one has ever experienced such a dramatic and fast downturn in terms of capital markets and interest rates. But the good news is Malaysian insurers remained resilient. There was some incremental effect on capital levels, but nothing that threatened solvency in the industry. But now is the time to reflect and evaluate any weaknesses in the balance sheet and adjust going forward. So lastly, going forward, you'll see the industry accelerate the use of technology, both for intermediaries and in the workforce. Even just our small team here at the Life Insurance Association, we're now officially outfitting key staff with laptops and making sure that they have the environment right to be able to work from home. Some of us may actually miss working from home. I heard this morning on the video that not everybody is happy to go back to the office to work. So another trend will be, of course, expanding the use of self-service. There'll be review of BCP effectiveness. There may have been some weaknesses that were evident with third-party reliances, third-party vendors, and those things need to be addressed. Again, the balance sheet, although resilient, there will be need to review and be able to see where the weaknesses showed up right during this financially stressful time. There's expected to be, and there has been obviously, a short-term hit on sales. We're watching persistency very, very carefully, meaning the numbers of customers who may drop their coverage. This would be most likely the customers that are most seriously affected economically. Although in past crises, we've not seen dramatic drops in people maintaining their coverage. As a matter of fact, it's often the case where people's awareness and appreciation for their insurance coverage increases during difficult times. Profits, there'll be some incremental hit on profits with the low interest rates, and we're still yet to see full recovery, right, in asset values. Even though the markets have rebounded some, they're still generally not at the same levels as they were previously. One interesting thing is that we'll be closely watching demand for insurance, because in previous crises of different nature, perhaps, but we've seen demand for life and medical insurance actually increase during the recovery stage. And so in general, we think that with the MCO evolving now to the RMCO, that sales have already started to recover, but it may take 1 or 2 quarters to start to see, the greater degree of recovery. So, yeah, that sort of sums up the situation with the life insurance sector.
Okay, great. Thanks a lot, Mark. A lot of key points there, right? One specifically thing that maybe we need to clarify a bit is the financial relief that you talk about, right? The 8 million ringgit Malaysia. What is it
Yeah.
about, and how does it go about on this financial relief thingy?
Right. So the history goes back to late March, where Bank Negara approached the industry on behalf of the Ministry of Health for the industry to come together with a contribution to a fund to subsidize COVID testing. And so the Life Insurance, the Tocqueville Association, and the General Insurance Association contributed 8 million ringgit to a fund that subsidize our policyholders when they need to, because they may have symptoms or are at risk, go for a COVID-19 test. So we subsidize up to 300 ringgit per individual per test.
I see. Okay, it's really good, right? It's a really good move to help the government as well. Yeah, in curbing this situation. Yeah. Okay. We have Mr. Antony here with us already. Yeah. Antony, can you hear us?
Sure, I can hear you. Hopefully you can hear me.
Great. Yeah, we are good now. Thank God you're here.
And you just say, this has been the hardest WebEx I've ever tried to get into.
But you're just right on time, because next is you, yeah. So yeah, just say hello to everyone, and you may just let us know your view of what is the current condition for the general insurance sector, perhaps in Malaysian market.
Sure. So like everyone, I think everyone was disrupted. You'll know. So for general insurance, typically half of general insurance is motor related. So for the whole of MCO period, there were almost no new car sales. So that's obviously an immediate impact. Everyone is trying to get back to normal, but I think, as we all know, during these challenging times, people will probably be thinking a little bit harder about whether they need a new car or not. Having said that, we've seen, and I don't know whether Malaysia will reflect this, but in other markets like China, we're hearing that actually car sales are going up because people are afraid of taking public transport. So, and I know the government has had some incentives on sales taxes elimination to help reduce the price, but we'll have to wait and see. It's a bit too early to tell whether that, is on the road to recovery. For other types of insurance, I mean, we also saw people weren't renewing their car insurance when they weren't allowed to drive out, so they were waiting. But of course, now we are seeing a flurry of people rushing to renew because they obviously can drive now and go out of state. So that is recovering, which is good news. For other sectors, this is the time where insurance actually becomes more important, right? Because if you're exposed and things are financial difficulties, the last thing you need is a flood or something else affecting your property, and then you're going to be in severe trouble. So we find that and certainly medical side, I'm sure Mark would have touched on this, people are sitting at home kind of worried about their health. This is something that is very prevalent. So I think people are thinking harder about what they should do and whether they should invest more in an insurance policy going forward. Travel insurance, of course, hugely affected as well because there are no planes flying. So that is something that we have to deal with, and that needs to recover. But again, it shows, I think you'll see insurance companies coming out with policies that cover specifically COVID-19, and some will probably cover pandemic going forward. So at least that will provide, I guess, more impetus for consumers to purchase the insurance because of unknown hazards that lie ahead. So all of this, again, prevalent. So the immediate impact is obviously those two lines more severely. SMEs, we know obviously that restaurants have been very badly affected. So there will be, without doubt, some restaurants closing down, etc. Some smaller businesses that will obviously affect the insurance industry as well. So if I look net, whilst it's I guess looking ahead in a looking glass, we think there can be up to perhaps 20%. Impact to the entire insurance industry in terms of premiums, simply because of a lost quarter, as I put it. But like I said, what it has allowed, though, is it has allowed for, I guess, more innovation in terms of coverages. So I think you'll see, and you have seen already, COVID covers and there will be more, I guess, in the pipeline. So whether individuals and corporations start thinking about this in a different way. Again, another opportunity is cyber insurance, right? Everyone is heavily online now. Cyber exposure is significantly heightened, particularly with work from home situations. So corporate networks will need, adequate protection, because an impact on a cyber attack will have a much bigger effect than it had in the past, I would think.
Okay. Okay, great. Anything that you want to add on, Antony?
I think that's probably the high level, I would say. But again, I think government is helping, obviously, with the stimulus packages. But like everything, it's how fast do we return back to normal? There are lots of different discussions on the shape of the recovery, U or V. I heard something very interesting yesterday. It was Neil Ferguson, who's a quite accomplished historian, an economist. He likened it to a tortoise-shaped recovery. So if the outline of a tortoise, it has a big hump, and then as you come down the neck, then you get the head of the tortoise, right? So the head is lower than the peak of the hump. So I think the predictions are there will be a return back to normality probably sometime next year, but it won't recover to the full height of 2019. That will probably going to take a few years.
Right. Okay, great. Thanks, Antony. So now we will open up to the Q&A session, everyone. Yeah. So if you have any questions, please let us know in the Q&A box that you can see there. Otherwise, we will keep on talking and discussing on these particular issues here, right? Mr. Mok, will you be able to share some numbers or some condition of insurance market in Malaysia in a short brief?
Well, I think I don't have any numbers with me, but I think that's what Antony and Mark has mentioned. I think we have a lost quarter, so to speak. I suppose in the quarter where we were all in MCO and lockdown was happening, new businesses were down, and I think companies were obviously making sure that premiums are collected. I think that was the focus, to ensure the operations can run as normal. Talking to the customers, and agents can still, I guess, talk to the customers to build new business, and also making sure there are interaction with the policyholders. I think we would expect the quarter business to be much lower, but certainly what we are seeing financially as an impact is on the asset side of the balance sheet. As you know, market values of investments are so volatile now. There's so many knee-jerk reactions. We are seeing a bit of recovery in the stock market, but certainly the numbers have dipped. Fair values of investment have dropped, and interest rates have dropped as well. So I think we are seeing some hit on the asset side, and nevertheless, I think in general, insurance companies in Malaysia are pretty well capitalized. So hopefully we shouldn't see any issues in terms of solvency. I think I'm quite confident to say that most of them are well capitalized, over 200% of CAR, capital adequacy ratio. So I think, yeah, so I don't now, I think we are going to see probably some hits on the asset side of the balance sheet, predominantly, in addition to new business.
Right. Okay. So it's not too bad, it sounds,
Yeah. Go ahead, Brian.
Yeah. One of the key things that you highlighted in the first session just now, especially when you talk about insurance sector, is part of this transform and re-emerge category, right? And one of the key things for these insurance companies to survive or to sustain is really about capitals, right? They do need sufficient cash flows for them to go through this difficult period now. Like I said just now, one of the questions that I asked earlier on, we have insurance companies, then we have insurance agents, we have agencies as well. So it's like a manufacturer to a distributor to a retailer in such a way, right? In a normal business circumstances, we don't really see a clear integration of capital support from the manufacturer up to the retailer perspective? Do you see this in insurance sector?
I think maybe I can share with you what we have observed in other countries, because especially in China, where the virus has hit first, and we've seen the recoveries that started in China. I think some of the examples I can share is I think in China, to keep some of the insurance agents active, to be actively still engaged with their customers, some companies are giving free insurance policies for agents to sell. So I think there was certain innovation that they're doing in terms of to enable the agents to still operate. And obviously, we also see in other countries where there's certain support given by insurance companies to their agents to enable them to I suppose still continue actively in their work. But what I personally have not seen that here in Malaysia yet, but it's certainly something that I believe the insurance sector are also actively looking at, and see whether to assess the financial health of the agents, and to ensure that their financial health will enable them to survive this pandemic.
I see. Great. What about Mark? From the Lian perspective, do you see this kind of structure is in place now among the life insurers?
You mean how the insurers or manufacturers are assisting the distribution? Is that what we're talking about? Right.
That's right.
Well, I think we see a variety of things happening. I think one of the challenges for the insurers first is to, like everyone else, is to try to understand how long this situation is going to last, right? And so we're coming out of the MCO now, right, and into recovery, and we expect that intermediaries, agents in particular, will be better positioned, right, to interact with customers and potential customers. In the meantime, there have been many examples of agents and agencies that have adopted virtual methods of providing new advice, actually closing transactions remotely, and there's also been certainly instances where companies have come up with loan facilities for agents or agencies that are in need, have allowed access to deferred benefit accounts for distribution, have reduced requirements to maintain their contract, all types of efforts to try to assist the agency distribution to get through this period.
Right. What about from the PIAM side, Antony?
Yeah, so I think it's similar. I mean, what we've seen clearly is they need to rapidly adopt, digital methods of connecting with their customers. And so the ones that have already been doing it, I think, have benefited a lot. The rest are now rushing to do it. And on top of the incentives that Mark spoke about, which we're doing the same, I think there will be also a push to also provide incentives for them to become more digital in a faster pace. And I think if they're able to adopt, they can actually be much more productive because they're not having to spend their time going from A to B visiting individual customers, right? And that's now the preferred method from a consumer perspective. So if they look at it positively, I think there is upside.
I see. Great. When we talk about the adoption of technology, right? It's just a while. Yeah, let me just. So when we talk about adoption of technology among these insurance agents specifically, right? It's something that we are looking at in the private higher education sector last 2 weeks that we had a discussion before with the panelists as well. Universities now are also using a lot of technology adoption, right? To give online teaching and learning as well. That also created a new phenomena where we actually can get students overseas that they do not really need to come to Malaysia to study, yeah, and therefore they bypass all the international students requirement altogether. Yeah, so the same thing now, I'm imagining that in the insurance sector, if the insurance agents are able to do the same way, yeah, which means that you also can serve international clients. Does it make sense? Does it really work? Can they actually sell a product that is internationally recognized instead of just Malaysian-based insurance product? Any one of you can start first.
Maybe I'll talk about the life side first. I mean, generally, there are barriers to actually soliciting, you know, a Malaysian insurance product to a non-Malaysian overseas, right? It may be a bit different if it's Malaysian overseas, but currently the regulation requires the contract to be consummated, if you will, or to be implemented onshore physically. It's virtually, you know, but actually to Malaysians in Malaysia. So, but it's also an interesting concept as well. You know, there have been this sort of ASEAN movement to try to open up different markets, which is in our business has been very slow to develop. It will be interesting to see whether there is any acceleration there, but largely, I think the market will still be, you know, Malaysia, but it opens it up to, let's say, an intermediary in the Klang Valley can talk to anybody in Malaysia instantly, right? You know, a family member referred to somebody else in East Malaysia can be on the line and talking their needs very quickly. So it will be interesting to see how big a percentage of business maintains or continues or grows to be transacted virtually. And there are some gaps that need to be filled in terms of the regulation and in terms of you know, the can be done virtually and how it's done. But I think we're moving very quickly.
Right, excellent. Well, that's why we always say when it comes to the new normal, right, it's not really just about adoption of technology. Yeah, based on a lot of panelists has been telling us, it's really a lot of change, new environment change that includes like what Mark mentioned just now, regulation, for example. Yeah, can this be changed as well in order to fit the new normal condition now of doing business? So what about from PIAM side? What is your thought, Antony?
Yeah, so similarly, I mean, I think similar restrictions apply from a regulatory aspect, you know, because regulators always want to control what is in their jurisdiction, and that's more to protect the consumer, right? So if something goes wrong, they have the ability to take action, whereas I think cross-border starts to get incredibly difficult. I think more importantly is like what you said, the ability to how you connect, right? So training is a huge piece of this. So we've seen that, you know, people are more willing to get engaged in terms of training. They have more time on their hands to spend. So agent professionalization is always a big topic. And as the market liberalizes, particularly on the general side, right, we have motor and fire in a partial de-tariff situation now. As it further opens, there will be more products with different coverages, which starts to get more complex for the average consumer to understand. And this is where a professional agent plays a very important role. And so we also have, for example, the Malaysian Insurance Institute. I want to bring that up. They are doing a lot of training for insurers and agents, etc. And they've been able to do a lot online. And of course, one has to look carefully at how to run online training sessions, because there are good and bad, right? And those that are good can be very powerful because they can be very targeted. But of course, the poor ones are going to lead to the opposite effect. But I think in general, it will help us accelerate agent professionalization, which is a good thing. And in turn, I think consumers will also become more knowledgeable about you know, what's out there and what's available. And again, so the bigger picture is with greater connectivity, it does reduce distribution costs. And that's something that is always a key in terms of being able to reach the B40 segment, because it's very price sensitive, and the challenge has always been in the past that to get an agent to intermediate to on a low premium policy, it becomes not worth their while because it's just too difficult and they won't earn enough money for the time spent. So, as we move faster in this area, I think that may open something up more so that we can increase insurance penetration.
Right. Excellent. Mr. Mok, we have a question here from Chong Kin Leong. Well, he's requesting for the slide of the 4 quadrants. So I'm going to play, I'm going to show the 4 quadrant slides again here. And can you just explain a bit more detail of what is the way forward should the insurance sector be looking at in specific, Mr. Mok?
Yeah, I think we have been talking about it for quite a bit in the past half an hour in terms of what the things that insurance companies are going to look at. And I think one thing that keep coming up is the technology piece, right? Not just in the company, but also how the company interacts with customers and inevitably the interaction with agency network and so on. And what the advantages those technology piece will give rise to. I think if we look at up to pre-COVID-19, investment in technology has always been there. I'm sure most companies have plans to invest one way or the other in enhancing their systems, enhancing their IoT to basically interact with their customers. And we've been seeing that in the market already. Some companies are using internet, AI to basically get more data, looking at big data and what Antony was saying about de-tariffication. So we're also seeing some certain general insurers who are using data to enable them to price their policy more effectively and to the customer. And this data help them in analyzing exposure, claim risk, and so on. So I think with COVID-19 here coming in, it just accelerates the need for companies to look into technology more seriously. Insurance companies has always been, compared to the banking side, has always been slightly behind in terms of technology. But I think now is a time where it basically gives a very valid reason and strong push that companies should now focus more on how they want to invest in technology to boost the operations and look at technology more detail, how to get their business. I think one aspect that we talked about a lot in the past half an hour was how to sell new business, right? In this new normal, which we don't know how long it will last. But I guess the big question is when will we go back to normal? The big question here is when will the vaccine be found, and when the vaccine is found, then things can get back to normal. But how long would that take? We don't know. So we have to, I guess the industry has to survive this period of uncertainty. And in this period, face-to-face are no longer the norm. So how to sell a policy contactless without face-to-face? And that's where technology comes in. But I think having said that, it's not just to weather the storm, but also to see how investment technology can further your business, can further reduce costs, increase efficiency, right, and all that. The other aspect I want to touch on technology also is the business model. I think in the trend up to, again, pre-COVID, we see a lot of companies are moving to offshoring their operations to a service center in countries like Philippines, even in Malaysia, right? And also India, for example. So with COVID-19, it affects all countries globally and at different times. It brings the question BCP, i.e. your business continuity plans. Are you able to operate, continue operations in such situations where you could be selling your business here in Malaysia, but your operations are actually outsourced to a company or to a service center outside of Malaysia, who may be still under lockdown compared to Malaysia, right? Or because they are in different time frame as far as the COVID-19 pandemic. So BCP plans, how to put information in cloud, cloud management, those things will come in. So I think when we talk about transformation, one of the key aspects is how companies can transform themselves and look at opportunities to improve.
Right. Okay, so Mr. Mok, as you mentioned, right, the impact of this pandemic and the current economic slowdown it's a bit difficult for us to estimate how long it will last, basically. So what is your best advice to the insurance companies or the agencies? How many months of reserves of capital do you think is required for them to endure the situation?
Yeah, I think one of the aspect that we kind of advise in our post-MCO reset plan is that we're going to look at three areas. First of all is financial operations, second is operations, and third is data and technology. So I think for insurance sector, I think life and general are quite different in terms of the length of time and in terms of how far forward you go to project. So it all comes down to cash flow projections, your budgets and forecasts. I mean, the life sector, you're talking about products which are long tail. You got to service policyholders in over to a 20-30 year period, depending on the coverage period you have sold. So the projection of cash flows become very important, and how you, I guess, do a sensitivity check on the cash flows, how to stress the cash flows, as what Mark was earlier mentioning. And now with this global pandemic, the sensitivity analysis and how you stress it is now put to a test, right? And comes to that also how you match your asset and liability. So I think again another area to look at is the size of your asset, the duration of the asset, and how does that match with your liabilities. All right. So I think there's something there to look at from the life side. General side, perhaps also similar, but obviously the products there are shorter tail, and you have to project cash flows and see how much you need to, I guess, put aside for operations and investments, and how much of the reserve do we have to invest for the future.
I see. Okay, great. Antony, earlier on you have mentioned about the cyber security insurance, right? So there's a question here from Nasha Joanna. Is cyber security insurance a new product? Is it available for all insurance company?
So number one, it's not new. It's relatively new to Malaysia, I think. So some companies have been selling it for a few years. I mean, the company I work for, AIG, does as well. So it's very specialized, right? So the specialist insurers that do it, because it's quite a complex product, and it requires, especially understanding the claim side. When there is a claim made, you need all the respective professionals available to deal with the claim and remediation work. So all of that is there. So it typically comes from, I think the market really first started in the US, and then as it moved across, it really was Hong Kong, Australia, sort of more mature markets, Singapore, launched before. But what we've seen is in the last 2 years, obviously a big spike in interest. But of course, it comes particularly from corporates, right? So the large corporates, GLCs, etc. Because if you're sitting as a director on a board, you want to make sure that you understand the impact to your business, and therefore, hence the need for that insurance. But we suspect that there will be some form of covers probably being rolled into smaller products. So SME may be an area where their partial covers related to cyber will probably start to be coming in there. So we just need to test whether the demand is there for what it is. Like I said, it's definitely a hugely emerging risk.
Right. Okay. Another question here by Chua. During the MCO, the number of outpatients and inpatients in the private hospitals were down by about 60 to 70%. Therefore, I'm sure the claims were down during this period as well. Can you let us know how much claims in percentage-wise were reduced during this period, if you have any numbers of that?
I can make a little bit of comment about that because that's been
Right.
a topic of discussion. Yes, I mean, claims are down because hospital admissions are down. Now, we don't have specific numbers yet. I mean, we get data collected on a quarterly basis, so it's really hard to tell because Q2 is still ongoing. But in the past, in these types of situations, maybe not an exact parallel, but when they've observed or there's been an impact of reduced claims, it's usually followed by a spike and an uptick in claims. So it's really difficult to see, what the whole claim situation will be like until we have a period of normalcy, so to speak, right? It's only now, I think, elective surgeries are allowed, right? And so the term elective is a little bit misunderstood. Elective obviously means that the patient can make their own decision about the timing of when to get a necessary treatment, right? Doesn't mean that the treatment is not medically required. So there's expected to be a little bit of a pent-up demand for people to get procedures done. And so we expect over the next few months that claims will actually exceed what the normal run rate would have been before the MCO.
I see. Okay. Antony, you have anything to add on this question?
I think, well, the medical related, there's also, of course, the concern that there are a lot of people not going in for treatment, like, cancer, etc. I think all around the world there's a fear that you get, so many months' time, a little bit of a spike in those people that, weren't seeking the appropriate treatment at the time where they would have needed it, right?
Right. And of course, the next question is also somehow linked to this as well. During the MCO, no cars on the road, and therefore less accidents, so no claims at all.
Yeah, so I was going to touch on that. Obviously, there was a reduced number of claims, which is less deaths on the road. Definitely something we're always passionate about. So that's definitely a good thing. I did notice, though, there were a lot of food deliveries on motorbikes that behaved as if the roads had no lights and it didn't matter which way up the road they went. And suddenly, when the flood of cars is back on the road, we are seeing, unfortunately, a spike in motorcycle-related accidents now. So I hope it returns back to normal. But it's unfortunately, Malaysians never seem to learn.
That's not so good to hear, right? Okay. Another question here from Khalis Lokman. How's the coverage of specific premiums handled this pandemic? Has COVID-19 gave a huge impact towards these claims, these kind of premiums? An example in change-wise of pricing of premiums, insurance companies linked with hospitals or something like that under the health medical sector of insurance?
Maybe I'll just make a comment because we really don't expect, when at least related to life insurance and medical insurance, we really don't expect any material change in the way products will be priced and the premium levels will be set. Especially in Malaysia, you look at the crisis has, the number of deaths and mortality have been well controlled relatively to other nations, right? And so there hasn't been a material effect there. And given that, this crisis this pandemic is expected to end at some point, right? It's not likely going to add to any of the pricing factors. The lower interest rates will come into play with certain types of products because companies then would expect to make less returns on the monies and the reserves that they invest, right? But there's still not likely to see any material impact in terms of premiums.
I see.
The general insurance may be slightly different, I'm not sure.
Yeah, Antony, your thoughts?
Yeah, I think, it's interesting because, everyone's trying to come up quickly with COVID-19 covers. And I think now the thinking is actually beyond COVID-19. It's actually just generally pandemic insurance, right? Because I give you an example. The example I love to use is Wimbledon tennis, right? Everyone knows that big event. And so they took out pandemic insurance for 17 years in a row, paying a premium of £2 million a year just to cover pandemic, right? So you imagine most people would be like, after a few years of paying this kind of money and not seeing anything, they'd say, why are we buying this insurance? Anyway, this year it triggered, and I heard that apparently the payout is in excess of £130 million. So, you know, it's a complex exercise, and I think the difficulty for us coming up with simple products is you just don't initially have enough data on how to price. So you have to make a lot of kind of, you know, intelligent assumptions, and this virus evolves as it goes along, right? So, you know, one has to kind of keep repricing and retailoring it. I mean, thank goodness for Malaysian mortality rates very low, and you know, we seem to be coming out of the end of it. You know, and touch wood, hopefully no second wave, third wave. But you know, who knows the next pandemic that comes along? You know, what's that going to be like? It will have likely a very different mortality rate, infectious rate. So we just have to be much more conscious about all this, and I think this has taught us that lesson. So the way we live, where everyone is much more prudent and cautious about, you know, large crowds intermingling together for time, is something that has to be, you know, worked on. And I think insurers will come up with the necessary covers for it. Like I said, coverage is better than none at any time. And even actually those people that bought travel insurance, for example, let's say an annual policy before, you know, the virus hit, and they all got their cancellations paid for, right, in full. So there's always a sort of a silver lining there. So I think if people will relook at, you spoke earlier about supply chains, etc., you know, they will want to make sure that there's some ability to get insurance to cover some of that, right? But business interruption related to pandemic is a big hot topic. Typically, it's not covered, right? And I think a lot of it was because after SARS in Asia, a lot of insurers were very careful about the wording. The reality is if you want full cover, like I gave that Wimbledon example, it's very expensive. It's not cheap.
Right. Okay. What about mental health and depression? Can this be insured as well? Because this is one of the rising cases, right?
Yeah, I mean, this is a topic also that's been debated within the industry. You're talking about mental health. I think you're talking about for medical insurance, right? For hospital insurance, right? Certainly. Well, it is insured in many cases in other jurisdictions. In Malaysia, we've been looking at it. The issue again is lack of data, really. You know, we don't have enough data on the type of conditions that actually and the frequency of hospitalizations, etc. But there is a push. There is some, I think, limited coverage in the marketplace now. Not very much, but technically and theoretically, it can be insured, right? So Malaysia is not on par with some of the more advanced markets like the US, but it's something that we're looking at.
Right. Okay. Antony, you would like to add on anything?
I think Mark's covered it. I mean, we don't do so much on the general side, of course, but definitely it's something important. And actually, you know, this whole work from home is also well known that it is causing new stresses, right? There are unfortunate stories of, you know, domestic violence, etc. So, you know, we do need to look at this, and whether this starts a new trend, we'll have to wait and see. But I fear that there will be a rising incidences of it.
Right. Okay. Got it. Mr. Wong, perhaps we want to address this question here, asked by Brandon Tan here. How can insurance companies still make money and still survive during this period? So from advisory perspective, any advice for them?
I think so far, if you look at the experience that they've had, I think one of the things that insurance companies are watching is obviously the incidence of lapsation policies. I think the economic stimulus packages that the government has issued, obviously we all hope that it will be able to stimulate the economy, put money in the pockets of Malaysians to spend and to drive the economic sector. If the economy improves, business improves, the risk of which lowers the risk of business going out of business, insurance will thrive at the same time. So, but it's all still early days. We don't know what will happen in the next 6 months. Hopefully, like what Antony was saying, shouldn't be. Hopefully, we don't have a second or third wave. What we're seeing here today, the statistics are going to continue to improve. With that and all the packages that's in place, we hope obviously the business in Malaysia will start to recover starting third quarter of the year. Still early days right now. I don't see at the moment any major issues that insurance companies in Malaysia are not able to have the financial difficulties, who have problem surviving. Like I said, in general, the companies are well capitalized, and obviously we have to monitor the degree of lapsation, the degree of companies, policyholders renewing their policies, and as business picked up, insurance will be required or be needed. And in these difficult times, I guess the importance of insurance will become more important. People see the need for more insurance. So, but however, I think one thing that we shouldn't, lose sight on is how to improve, right? So therefore, coming back to the post MCO quadrant that we kind of came up with, we think that it is now a time, and it gives you a push now to invest in technology to weather the storm, not just for now, but also for the future. Who knows what will happen after COVID-19, right? There could be another pandemic, or there could be another financial crisis. So the only way, I guess, one of the way that companies should look more seriously into is how to invest in technology, how to reduce costs, be more efficient, and be more innovative in their product offerings.
Right. Okay. So throughout this whole mornings, right, we have talked about a lot on technology advancement. Yeah, and definitely we see that this is something to going to shape the insurance industry very soon as well in Malaysian case, right? So therefore, Sumiko and Jürgen Supia here also asked about how exactly will digital marketing perhaps set the trend of insurance industry moving forward. Any thoughts from any panelists on the use of digital marketing?
I mean, we've seen examples of travel insurance, very heavily commoditized, and that already was heavily online, and customers willing and at ease with purchasing, in a direct manner. We've seen, actually, it was interesting. So throughout MCO, direct digital channels were also still doing well and really not badly affected at all. But on the whole digital side, it's only about, I think the stat I had for 2019 is about 18% is transacted via those channels, so still a long way to go. The issue really arises in the complexity of the product, right? So how much of it, how many individuals are at ease with understanding, insurance terminology, and also understand enough about what is the cover that they need. So that's something that is educational. It takes time. The industry has been embarking on pushing, awareness of that. I think we did it when the beginning of phase liberalization started, but obviously there's much more that needs to be done as well.
I see. Okay. I think this question requires feedback from both Liam and PM as well. What are your thoughts on the agency model being overtaken by online model, especially with the hurdles in purchasing insurance, such as painful customer service, slow processing, difficult claim management, etc., etc. So, what are your thoughts on this matter?
I'll just quickly. I think we're going from that. It will always agents will always be around. I think that's the reality, right? And those that know how to adopt digital channels will be even more successful. Because at the end of the day, what do people need? People need advice. They want to be able to reach out. So whether the insurance company does it directly or an agent, and then an agent offers choice to the individual, right? So I think there will always be an important role to play. I would say though that we have been investing as an industry, certainly on all the fronts, claims, servicing, etc. And definitely, I think you'll have seen that in this first phase of market liberalization, a number of claims and complaints about claims, certainly on the auto side, has dropped a lot. So there is actually been seen a significant improvement. So the digital channel, digitalization of what I say has improved the customer experience.
Okay, what about from Liam's side? Mark?
Yeah, I mean, I agree with Antony. I think agents will always have a place, especially when the product we're talking about actually requires advice, right? But agents do need to adopt and adapt to, to the uses of technology, right? And I just think that it really also depends on the product that you're talking about, as Antony said. Many products, simple products, semi-demand products can be easily sold or distributed right online. But complex needs like retirement planning, protection planning, education planning, those type of things really need a fact-find session, an analysis, and real advice. And how that advice is delivered, there isn't anything yet that can replace a qualified, experienced individual for delivering that advice. And so whether that is done remotely, whether that is done face-to-face in a traditional way, I mean, I think insurers will try to make sure that they have the capabilities for all of that to actually provide the customer the choices of which the customer, want to interact with the company.
Right. I guess based on what I've heard from both Liam and PIAM side, right? The customer's journey and experience is extremely important, right? In the insurance sector, yeah, since it's a service industry. And therefore, the use of technology is relatively good because, as what Mr. Mok said, companies have been using AI, for example, IoT, to understand the customers better, so that you can actually, tailor-made certain products for them specifically as much as they can. But at the same time, traditionally, we know insurance sector is very much of a direct selling kind of concept, yeah, before all this technology thingy came in itself. So that's why I guess the fear of agents that, will you be replacing me instead of getting my service? And of course, now when we're hearing from Antony and Mark here, indicating that it's relatively important as well for the agents to be around, because you do need the kind of advice and personal touch to your clients, right? Yeah. So my question here is that what kind of communication strategies that the insurance companies is using in order to have the right message getting across to these agents that, it's not really the technology to replace you, but it's to complement you to provide a better service, more personalized service to your potential clients, perhaps.
Yeah, so I think whatever, I remember, whenever we say something, typically, I think, the agents will always be worried at the beginning. And I think you've seen many waves of this. I think in the early .com era, there was a similar thing that was occurring, right? Everyone said, oh, technology is going to replace the agent, and the agents were worried. And in fact, it hasn't changed at all. All it is really the key is for them. And I think they're seeing it already, because now they see some of their peers who have adopted technology. And I've even seen some agents even communicate using WhatsApp, to buy and sell the travel insurance for their customers. So they've suddenly realized, hey, these people actually are selling more and faster and are more successful. So they've seen real evidence of some of their peers doing well. So I think it's no more really a hot topic. And now with this pandemic, they realize their customers, it's a health and safety issue. I mean, it can be life and death, right? So if you are have got elderly people who are very vulnerable to the virus, the last thing you want to do is be exposing them. So it's a very real need, and I think so this question goes away. It just becomes, how fast can I adopt?
I see. Mark,
Yeah,
any thoughts?
maybe I just comment. I think really, I mean, the messaging is one thing, but it's more important actually to see the actions a company takes, right? So it's one thing to say, you know, agents are going to be around for a long time, but it's another thing entirely to see companies making investments in how they can, you know, enable their agents, right? And investments in technology, investments in the systems and the training and the development that will facilitate their agents to evolve, right? So the messaging really to me is actually in the actions, right? You know, what is a company really doing?
Right. Okay. Well, due to time constraint here, we're almost time now. We'll take the last question from Chua here. Is there any development from Bank Negara Malaysia about the equity issue on foreign-owned insurance companies? You guys laughing there?
Yeah. No, I have sort of a non-answer answer because this issue really involves only a few companies, and so from the association point of view, we're not actually involved in this issue. But I think generally speaking, I think there are still discussions out there, and the thing is still evolving. But we haven't seen any. You know, any resolution, so to speak, right?
Okay. Antony, anything to add on?
Yeah, I just think, you know, from a PIAM perspective, I think the most important is, of course, it's the bigger picture, right? The macroeconomic picture. So it depends whether there is a change in I don't know whether this current economic climate, and I guess the next 6 to 12 months will show whether that changes the thinking about foreign ownership, etc. Of course, they've always had a philosophy, and I think you saw with Great Eastern, right? I think it's if you have an ability to contribute, I think there's then that seems to be the current policy, right? There's the willingness to consider ownership, but I think it's all of this is very much case by case basis. So like I said, it's again supply demand, because of course most important for Malaysia is the concern on, you know, job creation and further growth in the industry, etc. I think what is interesting is that, you know, there's a couple of insurers that obviously have openly said they are for sale, or owners want to sell their stakes, but there have not been any transactions. So clearly there are some challenges in getting this thing done, which probably going to get even more difficult now with the current climate.
Right. Okay. Mr. Mott, from the advisory perspective, any thoughts on this?
Yeah, I think I echo both Mark and Antony. I mean, this topic was a hot topic, you know, prior to the change of government. I guess more than 1 year ago, and then it changes again. You know, once the new government come in, now we have a new government again. So I think it's really something that also goes back to the government policies. But I think the focus right now is getting the economy back where it belongs, and all these stimulus packages are, you know, aimed to spur that, encourage that, you know, put money in the pocket. So and coming back to the point about M&A, well, it's really, you know, a situation where, I mean, we do think that M&A activity will slow down. This current economic situation. But also it depends on, you know, if the value of the company comes down, and there may be more takers as well. So, to cut a long story short, I guess there's no change in the circumstances. I think Bank Negara is talking to the individual insurer on a case-by-case basis to work out a long-term solution. Yeah.
Okay, great. So we are towards the end of the session for today on this insurance sector. So I would like to invite all the panelists to give the last bit of advice to the attendees here in regards to this business. We'll start with Mark.
Okay. No, I think basically the prospects for the life insurance business are still as strong as ever, and actually may see a pickup in demand. I think insurers generally we're well positioned to weather the storm, and there are a lot of lessons learned, and I think we'll see things actually on a positive side improving the resilience of the industry going forward.
Okay, thanks. Antony?
Yeah, so I think similarly, general insurers are well capitalized, so they're going to be around, and definitely we will see pick up in demand for certain products. Obviously, the economic situation will have an impact in the short to medium term. That there's no doubt about that. But I think the biggest plus side is the adoption of digital tools that will actually, I think, significantly help us all, both on the buyer and the seller side.
Right. Thank you very much, Antony. And last but not least, Mr. Mok from the advisory side.
Yeah, I think the lessons learned, basically what we've seen so far, we've seen that insurance companies are able to adapt to the suddenness of the impact of COVID-19, working from home, making sure they have enough technology and hardware and software to enable them to carry out the operations. So far, we did not note any major challenges, issues arising from there. But I think what is left to be seen is how companies can come up of this stronger, and the companies that are able to transform quickly, able to move into more technology and digital space, are able to basically come out much stronger. So I think it's an opportunity for insurance companies to look into that, to gain a bit of take the opportunity to gain, I guess, market advantage and market space as well.
Okay, great. So that's all for today for insurance sector for this industry broadcast session. Yeah, thank you very much for all of you to have attended this session this morning here. So the next session that we're going to have is next Wednesday, same time, 11 o'clock as well, up to 12:30, and we will be focusing on digital business sector as our last industry broadcast session. Yeah, and for that we also have an advisory panelist, Mr. Alvin Gunn from KPMG in Malaysia, and also followed by two sector panelists, Mr. Yeo Chen Chow, the co-founder of Faith Group, as well as Ms. Carol Fook, the head of SME seller adoption from MDEC itself. Yeah, so if you have any questions, you can email us or WhatsApp us at these numbers. And once the video is uploaded, the recording for today's session is uploaded, I will inform you via email, and you can watch it through our UWM-KDU YouTube channel. So for that, I would like to say thank you very much again. It's really a great pleasure and honor for me to have our three panelists. The first is Mr. Mark Odell, the Chief Executive of Life Insurance Association of Malaysia, or LIAM. The second one is Mr. Antony Lee Fook Weng, the Chairman of Persatuan Insurans Malaysia, or PIAM, and also, of course, our advisory panelist, Mr. Wong, the head of insurance of KPMG in Malaysia. Yeah. So thank you very much, a lot of you, and have a good day, everyone. Thank you so much.
Thank you.
Thank you. Bye-bye.
Goodbye.